the first thing I'm going to share with you guys is what's happening in Texas, and I'm going to do a specific breakdown for Austin as well. So I want to make sure you guys have this. For those of you guys who are picture takers, take your picture. You got to be fast with it because sometimes this the screen moves very quickly. But last month, the average sales price was down. It was down, but only down 1%, only down 1% for the average price. The closed sales were down 6.7%. The prior month, they were up. Months of inventory right now in Texas, 5.2 months of inventory versus last year, 4.8 months of inventory. Houses, the ones that are selling, are still going at a very fast pace, selling at 71 days, which is very quick. It doesn't feel as quick as what it felt like in prior years, so we are seeing fewer sales happening right now, but the ones that are the good properties we're seeing, those are happening very quickly. I'll show you guys, anybody in here invest in the Dallas-Fort Worth market? So this is the DFW market, Dallas and Fort Worth. Their closed sales last month were down 9.6%. Their average price was down as well. Pending sales down too, so Dallas suffered a little bit last month, but the prior month they did really well. I'll share with you guys the, I see some of you guys want to grab a picture of that, and I'll share with you guys next the Houston market. So if you're a picture taker, if you're investing in Houston, you'll want to grab this one. Houston did pretty well considering some of the other markets. Sales were down, but only down 2.3%. Average price was up in the Houston market. Days on market were only 60 days in Houston. When it comes to pending sales in Houston up 7% year over year. I'll jump through the San Antonio market really quickly. We talked about San Antonio market earlier. A great place to find lower priced houses. Just because they're cheaper doesn't mean they're a better deal, it just means they're lower price. Also has a little bit better cash flow, but not the same amount of appreciation. Last month, sales in San Antonio were down significantly, so we're going to see more deals and more opportunities down in the San Antonio market over the next couple months for sure. And then, guys, I'm going to jump straight into the Austin market, just in case you have some places that you need to be, because I know many of you guys are mostly here for the Austin market. Sales were down last month 9%, but in the prior months they were up and down. So Austin year over year, ending the year about flat. Sales up, I think, end of the year up about 1%, right? So not really here nor there. In a market like what we're in right now, flat's the new up. Last month, we saw the average price in Austin up 1.6%. Days on market were about 82 days versus 77 last year, so houses are still moving quite quickly. 90 days is pretty average. Pending sales are about flat to where they were last year. And if you look at leases, we had a reduction in the number of leases year over year. So we're all seeing a lot of people re-sign under their existing leases. Lease price was down, but only down about 2%. The stuff that I have on the bottom here, guys, I just want to just take a few moments to point this out. This far left one is 2020 versus 2021. So you see we had a 29.3% increase in the average price, right? We had a huge jump from 2020 to 2021. We had a big reduction in the number of sales in Austin from 2021 to 2022, partially because we didn't have enough inventory to even sell, okay? If you look at our months of inventory in this 2022 timeframe, it was about a 2-week to 4-week supply of inventory, which is the lowest that we've ever had in our history. But the sales were still up 10.4, average price, pardon me, up 10.4% year over year. Last month, 2022 versus 2023, sales were down 10%. Average price, we did give back some of the average price, some of the valuation in Austin. So the price was down 8%, 2022 versus 2023. And then 2023 versus 2024, sales basically flat. And then the average price down, but only down about 1.3%. So as soon as, I think we're kind of at the bottom of the market right now. And I know we had a mortgage broker in here earlier. We had a little talk about Fed Chairman Powell being switched out. I can't remember if it's March or if it's May, but we will see a reduction in overnight interest rates. So what banks lend to other banks for. There's some correlation between the overnight Fed funds rate and the mortgage rates that we pay on the properties that we buy, but it's not always a high correlation. So it should go down, but it may not go down as much as what we would, we're never going to see what we saw in 2020, 2021, and 2022. The only way that we'll see that happen, and I hope that never happens, which would be COVID Part 2, or China, North Korea, or Russia throw over a big bomb to us, right? Those are the only situations where we would have very low interest rates again. So I think flat's the new up, considering where we are in the marketplace right now. Some of the market drivers we have, and I'll tell you guys, I'm going to put up 5 different items here, so wait to take a picture, and I'll address each one, and I'll let you know, like, here's the time to take a picture, because I'm going to build it slowly. So overall economy, consumer confidence, right now is about 89. Unemployment rate is about 4.4 in the United States, only 4.1 in Texas. So it's really strong, right? Really strong economy. Job growth, Texas, again, really strong. Stock market, we had a record stock market. S&P and the Dow had record gains last year. Anybody invested in gold or silver? Those like doubled over the past year, or even over the past 3 months. The business growth cycle also very strong. Housing affordability, right? Interest rates should decrease soon. So right now they're kind of in red. The interest rates make it a little unaffordable. So do property taxes and insurance as well. But those, I don't know that we'll see much change there. Housing supply, so we've got kind of this yellow, kind of, neither, not good, not bad. Active listings are growing, but we're kind of topping out at some of that growth. Months of inventory, 6 months is about what they call market equilibrium. Right now in most of Texas, we're in the 4 to 5.5 range. San Antonio is the only market that has 6 months of inventory. The housing permits, so we're not overbuilding and we're not underbuilding, so builders are being very cautious, which is good in terms of maintaining the prices. Construction labor growth, we don't have as many construction folks as we need, so we could use some more. Overall housing demand, so closing sales trajectory, basically flat year over year. I think the final number for 2025, and they're still tabulating everything because a lot of the realtors don't mark everything closed in the right month, but we'll see it basically between flat, 0, and up 1%. So not a lot of growth there, but flat is the new up considering the market that we're in right now. Immigration, so we do have more people moving here. I just heard that NVIDIA signed a big lease downtown Austin. So did you guys, I don't know if you guys read about that, but that's a big growth opportunity for us in terms of moving more people here. For those of you guys who have lived here for a long time, you're like, please, no, the traffic, no, we're not, no more, we're closed, right? It's like, sorry, we're closed. Yeah, exactly. But when we have more people moving in than people moving out, right, we see prices go up. And the last one, guys, and now you can take a picture for my picture takers in the room. We do have some wild cards, so we do expect some interest rate decreases, but the timing of those and how much it's going to be and how that's going to be affecting the actual mortgage rates, still kind of TBD. We did see some positives, so we saw the big beautiful bill, which encouraged some more real estate investing and specifically helps with depreciation. I know we had an accountant in here earlier. So depreciation is a non-cash expense that we get to write off against our adjusted gross income, so that was a big positive. We're in the middle of a couple of wars. In fact, I think we just kidnapped a dictator on Saturday, so I don't know where that happened, but we got some stuff going on, right? Some international political uncertainty, right? We've got some of the tariffs that are coming in. You're seeing those kind of going up and down. A roof, when I first started investing, was $3,500 to $5,000. Now roofs are $10,000 to $25,000, right? So we're definitely seeing some inflation there. We also have seen some immigration issues. So we're deporting people, which doesn't necessarily help us when we're trying to get labor into the houses that we're working on. And then, of course, AI is a big wild card. But what I will tell you about AI and housing is it's not really helping. If you look at, like, if you go back 40 years ago, it took us between 6 and 9 months to build a house. Today, it takes us probably in Austin 9 to 15 months to build a house. If you look at what a TV cost us, you know, in the 1980s, it was like $800 to get a TV that was like this big, right? Now it's $800 to get a TV that's like basically the size of this screen. So the prices of a lot of technology has gone down, but the technology, if you will, that goes into real estate and building, all of those prices have gone up. So technology is not really being helped by AI. I have gone to, I think it's Icon Builders, so they build like 3D printed homes. I don't know if you guys have checked those out. So I went to visit one of their sites in Wimberley, and they, you know, literally have like this little machine that just kind of goes around and just drops this little, you know, line of, you know, cement, and they just have to make sure the cement stays wet, you know, that it comes out and dries before they're able to put the next layer. So, you know, I thought, oh man, this is going to be great. It's going to be revolutionary. It's going to be incredible. But then if you look at the price of those houses, they're not cheap. They're like $800,000, right? So some of the technology that we're seeing there, even in 3D printing, isn't reducing the prices of some of those properties. So interesting to kind of watch that. But these are some of the different market drivers. The positive things are the things in green. The, you know, could be better, could be worse are the things in yellow, and the things in red are the things that we're kind of like, I wish it could be a little bit better for us. The forecast for 2026 is, gosh, guys, I feel like we're at the bottom of this market cycle. We're selling fewer houses today than we sold in 2010. But I think as soon as we see a little bit more certainty, maybe some international wars kind of going away, as soon as we see consumer confidence jump back up, as soon as we see those interest rates start to drop, we will see an increase in demand when it comes to housing, and especially here in Texas, where we still have more people moving than we have people moving out. If we could see those mortgage interest rates in that kind of 5 to 6% range, below 5, this market explodes. Below 5, we're going to be in a situation like we were in 2020 and 2021, where we run out of inventory. But my guess is we'll probably land in Q1 somewhere in that 5.5% interest rate range. And then sales, we'll see them rebound and flatten as soon as those interest rates decrease. Right now, 2025 forecast is we're going to be again up between 1 to 2% versus what we were in 2024. The forecast, for 2026 is, I think as interest rates go down, we will see those sales jump back up. Prices were basically flat at 1%, not really keeping up even with inflation here in Texas. But I think they'll be increasing slightly in 2026, again, all supported by the interest rate changes and some additional consumer confidence as well. So, guys, any questions about the market update? Any questions about the market update before we end the meeting? What questions do you guys have?
Maybe even about your own deals. There's a lady in here who wanted to ask some questions.
Yeah, does somebody have a question about a deal that they're working on? Has everybody in the front row gotten a chance to speak with Nancy already? You guys got a chance? You guys get a chance to talk to Nancy? Okay, you're good? You guys are good? And you guys are already coming as a couple, so I know you guys are good. Guys, what questions about? You can't tell me I've solved all the real estate problems in the universe right now. I mean, I feel like I got some superpowers, but I don't know if I'm that good. What questions do you guys have? What questions do you guys have? Yeah.
Do you feel like there's other states that you're aware of, like where a market where you could see that booming in 5 years?
Yeah, Texas will be booming in a year for sure. So, you know, I do see some people will say, Texas is too expensive. I'm going to Louisiana or I'm going to wherever. Cheap, you know, does not mean a good deal. So I've seen people go to other states where the houses were cheaper, and just because they're cheaper doesn't mean that they got a better overall price relative to what it could resell for after you do the repairs on it. Texas has like the 8th largest GDP in the world. You know, it's like Texas is almost like New York. If you can't make it here, you know, if you can make it here, you can make it anywhere. There's plenty of houses. I want to say Texas population, somebody help me on this, around 30 million plus people, and a ton of housing stock. If you want cheaper than what we have here in Austin, no problem, just go 60 miles north of here, or just go 60 miles east of here, or you don't even have to go that far east of here. Go 30 miles east of here. Go maybe an hour and a half west of here. And there's some stuff between Austin and San Antonio, but even stuff in Kyle's, you know, grown up in price, and stuff in New Braunfels grown up in price too. So you just have to go just a further distance from some of the larger cities if you're looking for lower prices. But to me, just because it's a lower price doesn't mean it's a better deal.
So when you say Austin market, what is the Austin market consist of? How far north, how far south?
Yeah, so I think, you know, once you get, you know, what was the name of the community that had the big tornado? It wasn't Jarrell. Once you get to Jarrell and just a little past Jarrell, you're looking at $100,000, $200,000+ houses. That's cheap. Yeah, that's cheap. Bell County, cheap relative to Austin, right? Yeah. You can even find great deals in Waco. So they're just, it's another 60 miles up the road from where we are right here. Yeah. But I mean, plenty of great deals, even just like from where, you know, some of our rental properties, they're probably 10 minutes, 5 minutes from right here. So plenty of great opportunities just, you know, right in this area. In fact, one of the, I think 1 or 2 of the properties that Nancy bought. Nancy, a lot of your properties are within 10 minutes of where, right here at the Domain as well, right? Yeah, so there's plenty of opportunities right where we're sitting here today.